During the first half of the year, $11.5 billion of capital flowed out of the Middle East into direct real estate globally. According to the latest research from global property advisor CBRE, the total amount of Middle East outbound investment during 2014 stood at $13.8 billion. London remained the main beneficiary of investment, receiving $2.8 billion, representing 24% of the Middle Eastern outbound capital. Some of the notable deals included the $2.47 billion Qatar Investment Authority acquisition of Maybourne Hotels and the $110 million purchase of the London Midtown office by a private investor. Hong Kong came in second with $2.4 billion, followed by New York with $1.1 billion. Despite weakening oil prices, acquisitions by sovereign wealth funds increased during H1, with sovereign spending standing at $8.3 billion, representing more than 72% of total spend. However, the H1 2015 results were boosted by two large hotel acquisitions at $2.5 and $2.4 billion each, one in London and the other in Hong Kong, by two different sovereign wealth funds. Qatar remains the largest source of outbound capital, investing a total of $9.834 billion, while the UAE invested $6.64 billion in global assets during 2014 and the first half of 2015 combined. Etihad Airways will start investor roadshows on Thursday for its benchmark debut dollar bond issue. The Abu Dhabi government-owned airline will be borrowing through a funding vehicle called Etihad Airways Partners. It's set up along with its equity partners Alitalia, Air Berlin, Air Serbia, Air Seychelles and Jet Airways. Goldman Sachs, ADS Securities and Anoa Capital have been picked as the joint lead managers to arrange a series of fixed income meetings in the United Kingdom and the Middle East, which will conclude on Monday. According to local reports, Etihad is looking to borrow funds with a 5-year lifespan, the proceeds of which are likely to be used to lend to its global partners, fund its own expansion plans and partly for general purposes.